I think for the uninitiated, let's start with the most basic of questions. What is a credit score? Who scores you on this credit score? And how does it work?
Thanks, Alex. The background that you gave is a very apt background, because typically if people are looking for a home loan, that is when this whole credit score, credit profile gets that much more importance. Of course, in other scenarios as well. So to answer your question, a credit score in India is typically between 0 to 900, between the four bureaus that we have. Somebody has between 300 to 900, somebody has between 0 to 900. So for our discussion, we say it is a three-digit numeric, and it is given by the credit bureau based on the algorithms. Now, so to answer your second question, who gives you the credit score? It is the credit bureau that gives the credit score, and which is universally acceptable. When I say universally acceptable, I mean the banks and the NBFCs and the other lenders accept this score. Of course, as we are speaking, there are a lot of fintechs that are coming today into action, where each one is trying to say we have our own scores to, based on our algos, we are generating scores, and that is how we will consider. But those are not universally acceptable. So the credit scores given by the four bureaus in India is sacrosanct, and there is a difference of plus and minus between each of the bureaus. So when I say plus and minus, for example, if you go to bureau 1, you may have a score of 720. With the same details, if you go to bureau 2, you might end up with 750, or you might end up with 710. So there is a marginal difference because of the multiple factors at the bureau level, but they give you the credit score.
Now, on behalf of those people that are worried about these scores, how worried should you be? Can you get a really terrible score, and what are the implications of that? But first, let's talk about how you could get a lower score. What affects this score? How is it calculated?
Okay. I'll answer one question at a time. So, how terrible you can get to -1, you can get to 300, you can get to less than 300. Now, what affects these credit scores when you are going downhill is if you've taken too many loans, you've been paying these repayments, your EMIs very late. There have been check bounces. There have been too many loans that you've been looking for, and correspondingly, those have not been approved. So these are few primary factors which can affect your credit score very adversely. And it is very important that you focus on these before you move to the next level. If a bank A is rejecting your loan application, don't take it as they have rejected you. They have only rejected your loan application. So don't make this an ego issue. Go back to the drawing board and understand why there is an issue, and if there is an issue, that needs to be rectified. Now, to answer the next question, what is a good credit score? Typically, if you are looking at a home loan, or something like a larger ticket loan, anything between 720, 750, depends on the banks, but that's a good score. Reasonable, all is good. But if you're looking at, say, non-mortgage products like personal loan or credit cards, banks insist on higher scores. But Alex, through your channel, I would again further like to reiterate that it is not the credit score that the lender is looking at. The lender is looking at the entire credit profile. So for convenience sake and for, making a big noise, everybody talks about my credit score, my credit score. There are instances where people with 820 out of 900 have also gotten their home loans rejected. So the credit score is not the primary criteria. It is the entire credit profile that the lender is looking at. So when you look at building your credit profile, your credit score is a byproduct. But what you have to focus on is to build your entire credit profile.
Fantastic. I want to get into the details of that, but even within this, according to the website on the State Bank of India, you've got loans that are up to 30 lakh. If you've got a CIBIL score of above 750, the rate of interest applicable is 6.7%, they say. And if it is above 750, they say it is the card rate. If your loan is above 30 lakhs and your credit score is between 700 and 749, you get 6.8%. So the difference is a 10 basis point difference, which if you're talking about a large loan, Aparna, would be a significant amount, right? But having said that, you mentioned that more important than just the credit score, it's your credit profile. So what are the various factors that an individual should bear in mind?
So first and foremost, there is also a sector of, there is like a large chunk which says that I don't want any loans, I don't want any credit cards, I can't be bothered. But today we cannot afford to be in that situation, because your credit profile is checked by your employers, some places even when you're renting a property, your job, your loans. So it is very important that you have a live credit profile. So that is number one. Number two, what you need to focus on is, like I mentioned earlier, repay on time. Don't take unnecessary loans. If you are not looking at any loans, don't apply for those loans just because somebody is calling you. And if you have loans that are, just hanging there and you are in a position to repay and close those loans, please go ahead, even prepay those loans and close those loans. Don't have too many trade lines open for yourself. And thirdly, you should have a healthy mix. So when I say healthy mix, don't go on applying for only credit cards. Don't go on having only personal loans. Have a mixed, diversified portfolio. So even if you are someone earning 7-figure, 8-figure salary and you feel you don't need a credit card, you don't need anything else, just have one credit card on with you, which you use regularly, because that does tremendously good for your entire credit profile. So a credit profile card, like I always tell people, is like the monkey in your wallet. If you are responsible with it, it does wonders to you. It really boosts up your credit profile and your credit scores. But if you mess up with your credit card, it is the one that really stinks really horribly. So credit card is something that I advise to have, but be very careful and responsible with your credit card. Alex.
And there are ways to automate payments if you have to do that, Aparna. I have a couple of clarifications, one with regard to the credit card. There are reports that suggest that if you surrender a credit card, your credit score can in fact be impacted, and so there are suggestions there to increase the allowance or the limit of that credit card before you do surrender. And the second one is, does buy now pay later affect your credit score as well, and missing payments there, is that detrimental?
Yes, but missing payments is 150% red flag, because once that starts, then it immediately starts getting reported, and then it starts affecting your credit profile. So the new lender who's looking at your credit profile is going to mark you in the red. So deferred payments, late payments are a big no-no. Now these buy now pay later schemes, I have my own reservations. People who are opting for these are already people who are credit stretched. Now, if you are going to give them another product which is going to further, accentuate their situation, then it is not going to help anybody. So buy now, pay later, there are two things. Now, some lenders are reporting them as buy now, pay later schemes. There are some lenders that are reporting them as normal cards. So you also need to check as to, with whom you are borrowing, what is there, read that fine print before you sign up for these. Because Alex, if you see, lot of these are online fintechs who are offering these BNPL schemes, but at the back end there is an NBFC on whose books these people are lending. So please understand and read and figure out what is it that you are signing up for.
Khatam. Bye bye, Tata, goodbye.